Welcome back, students who are taking financial accounting, and in this series of videos, which we're almost done, on doing the assigned homework problems for Chapter 3, the short exercises, and we'll just pick up right where we left off. So let me get down to the right slide and see we're working on 3-11. And as always, if you don't understand something, watch the video again. Go back and watch the theory videos, watch the introductory videos to accounting and bookkeeping. And if you still don't understand something, feel free to contact an instructor. Basically, chapters 1, 2, and 3 are about bookkeeping and the flow of, the data entry of information on the books. Okay, so 3-11 here. All right, financial statements and closing entries. The following selected accounts and balances appear on the adjusted trial balance. Right, so these are the accounts and these are the balances. And question number 1 is, what is the net income or net loss? Well, profit or loss is shown on the income statement, which is revenues less expenses. Gives you your profit or loss, your net income or your net loss. So, we have $1,800 in revenue here. Okay, so that's our revenues, and then we subtract out our expenses. So we have rent expense of $650, and then we have salary expense of $575 that we subtract out. And that gives us, let's see here, well, 650 and 575 is 5, 12, 11. That's $1,225 from 1,800, which is 75. That gives $575 is our net income. So 1,800 less 650 less 575 gives us $575 as a profit. Okay, net income. All right, so what is the change in retained earnings? I'm going to write up here the net income is equal to 575. Okay, because as you recall, we take whatever is on our profit or loss on our income statement, and then we can create the statement of retained earnings, which shows the change in the retained earnings at the end of the accounting period. So if our beginning retained earnings is 4,100, and then we have to add in, since we have income, we add in 575. That gives us a subtotal of 4675. But then we have to take out any dividends. So we take out the 300 and we're left with 4375 as our retained earnings, our ending retained earnings. Okay, but the question is asking, what is the change in the retained earnings? So if we had 4375 and we start it with, that's our ending, and we start it with 4100, the change is 275, which is the answer to the question. Now, since we're also talking about a change, all right, I'm going to present this in a slightly different manner, and this is probably the way I would have done it. Remember, this here is your beginning, okay, and then we're going to add in our net income, and then we're going to less our dividends to end up with our end. Okay, so if this is the beginning and this is the end, everything in between is what causes the change. So if I'm adding 575 for a net income and then I'm less 300 for the dividend, okay, that's going to give me 275. That's the actual change. And notice I didn't have to go and create all of this and calculate it all this way out, just because I know the structure of the statement of retained earnings, that here's my beginning, here's my end, and what's in between is what causes the change. Because let's face it, if this was 0 and this was 0, my ending retained earnings would still be 4,100. Okay, so I know that I could just take into consideration my net income and my dividends in order to know what the change in the retained earnings are. Okay, so let's see here. I'm going to put this, that means that triangle means change for retained earnings is 275, right? And then it says journalize the closing entry. All right, so now I'm going to do this on a from a simple to a more complex. All right, simple meaning remember what we have to do when we're making closing entries, we have to close out our revenue accounts, our expense accounts, and our dividend account. Okay, and we close them all to retained earnings. That's what we're doing when we're making our closing entries. So if I have 1,800 in my service revenue account, and we know that that's a credit because that's the normal balance of a revenue account. So if it's a credit of 1,800, and let me draw a T account here, and I'm just going to make SR for service revenue. I know I have $1,800 on the credit side. Well, I'm going to put a T account here for retained earnings. If I want to close it out to the retained earnings account, well, obviously that means I have to make that get that to be 0, right? So since it's a credit of 1,800, that means I have to debit service revenue for 1,800. And then, of course, debits have to equal credits, so I'm going to credit my retained earnings account for 1,800, right? So that would give me 1,800 for service revenue, which would give me a balance of 0 in that account, and that would move the $1,800 over to my retained earnings, right? Now, we're going to end up doing the same thing for rent expense and salary expense and dividends. So this is rent expense, and we know that expenses have a normal balance of a debit, so there's $650 in the rent expense account, right? Well, if it's a debit of 650, in order to make that 0, that means we're going to have to credit it for $650. And so I'm going to credit rent expense for $650, and I have to debit something else, which obviously is retained earnings for $650. Okay, so that's two separate journal entries right there. So by debiting rent expense for by crediting rent expense for $650, my balance in rent expense is 0, and my debit goes over into the retained earnings for $650. Let me erase this and put it up here. So retained earnings, and I had 1,800 and 650. Okay, so the next one that we have to do here is salary expense. Okay, and that's a debit of 575. So this is kind of the same exact thing as rent expense. I want that to be 0, so I'm going to credit it for 575. Debits have to equal credits, so I debit something else, and that's going to be retained earnings for 575. Okay, so when I post them to the accounts, I post a credit here. Okay, so that makes the balance in the salaries expense account 0 and puts the 575 into the retained earnings account. Then the last one is dividends. And dividends has on the dividends, that's a contra account to the retained earnings account, so that's a debit. Has a debit balance of 300. So again, I'm going to credit dividends for 300, and I'm going to debit retained earnings for the 300. Okay, so that means I have 300 as a credit, which means my dividends is 0, and retained earnings gets the 300. All right. So those are the 4 closing entries that are required in order to be able to close out the temporary accounts. Temporary accounts being revenues, expenses, and the dividend account. And I'm just showing you how it looks when they're posted into the ledger accounts, and I'm using the T account to represent the ledger accounts. Remember, the T accounts are a tool. You use them for different situations in order to be able to see the information a little bit better. But what we end up with here is those 4 journal entries, 1, 2, 3, and 4. Okay, and notice now that the balance in the retained earnings account, okay, the change is what? I have a debit of 650 plus 575 plus 300. So I have 1575 on the debit side. So let me write that in there. So there's 1575 on the debit side, less 1800 on the credit side, right? So the change, right, is 275, right, which is what we did for number 2. Okay, that's the change in the account. And of course, if we had a beginning balance, which was 4100, and that was on the credit side, if we added the 4100 in, so now we end up with 4375 as the final balance in the retained earnings account. Right? So those are the closing entries, but what I want to do here is I'm going to erase this all just for a bit so I can. That's the simple way. That's taking each and every individual account and closing each individual account out. Okay, meaning I closed out the revenue account, I closed out the expense account, the salary expense account, and the dividends account, and I ended up making 4 journal entries. But notice that it's perfectly acceptable to create all 4 entries, but on a little bit more advanced level, that gives me 4 times the possibility of making an error when I go to post to my ledger accounts. So when I'm making my closing entries, we're going to notice here, let me get rid of this blue stuff here. All right. What I want you to notice here is that we're using the same account again. Retained earnings, retained earnings, retained earnings, and retained earnings. Okay, 1's a credit and 3 are debits. Okay, so what I could do is I could combine all of these journal entries together, all right, and make just 1 entry. So I would have a debit to service revenue for 1800, and I then would have a credit to rent expense for 650. And remember, debits have to equal credits. If I have a credit to salary expense for 575, and if I have a credit to dividends for 300, right? And that thought process is no different than sitting here going, okay, service revenue, right? We know that this here is a credit, so I have to debit service revenue for 1800. My rent expense, I know that's a debit, so that means I have to credit rent expense. Salary expense, I know that's a debit, so I have to credit salary expense. And dividends, I know that's a debit, so I have to credit that for 300. Now, remember, debits have to equal credits. Well, this equals 1575, right? These are my credits. and these are my debits, right? Well, if my credits are 575 and my debits are 1800, that means I have to debit something else to the tune of $275, right? I'm sorry, not debit, credit. Something else to the tune of $275. And what am I going to credit? Well, where am I putting it? I'm putting it in retained earnings. Okay, so you see I just backed into, that journal entry, and I didn't have to, make, when I go to post it, I'm only going to post this one journal entry. All right, the journal entry looks like this in blue right here. All right, I only make one entry. I don't have to post 4 separate entries, all right, like I am over here. Okay, so I mean, there's nothing wrong with doing it this way. Okay, because the net effect is going to be the same exact thing as we see by that journal entry right there. And the effect on the retained earnings account is still going to be the same thing, where you're going to have an additional credit of $275. Okay, but you're doing a lot less work and you're doing a little bit easier, because you know that when you make closing entries, all you're doing is you're closing out your revenue, expense, and your dividend account. So you go down through each and every one and make just the opposite. If it's a credit, you debit it. If it's a debit, you credit it for that amount. And then when you get done listing all of those ledger accounts, you add up your debits, add up your credits, and determine whether, in order to make debits equal credits, determine which one you're going to make that will balance it out. Because now when I credit this $275, all that equals $1,800. So my debits equal my credits here, right? And I just make that to my retained earnings. Knowing I have a credit of $275, to get debits equal credits, I credit retained earnings. And I've made just one entry. And now when I go to post, I don't have to post to retained earnings 4 different times. I'm only posting to retained earnings once. Okay, so that's the more efficient and the more professional way of making your closing entries. All right. So with that said, I'm done with 311, and I'll see you in the next video for 3-12.